Joining us now for a closer look, what's playing itself out in that market scene is Martin Smith from Anchor Capital. Martin, a pleasure. Good afternoon.
Hi, how you doing?
Very good. How are you, Martin?
Yeah, better that the markets are a little greener.
Yes, I think yesterday was a bit of a weird ending to the day because we're looking pretty okay, I think, in midday trade. Today, again, we're looking pretty okay. Keen to get your thoughts on what markets could be contending with this afternoon.
I think we're still going to be taking our cues from what happens offshore. And we obviously saw a little bit of a sell-off last week around tech stocks, and that kind of filtered a little bit into what was happening on the JSE. So I'm still quite constructive on SA kind of from an overall perspective, but we'll definitely take our lead a little bit from what's happening offshore. So still need to check out what's happening there, obviously with the Fed meeting coming up. So a couple of things on the go.
Yeah, when we speak about those tech stocks, I've seen the word rotation emerge there. It looks like some investors looking for smaller caps abroad and moving away from what we've known to be the Magnificent Seven. I'm keen to get your thoughts on what might be leading to this, to these sentiments, or even this market behavior.
So I think you obviously saw a lot of heavy lifting by a handful of tech companies offshore. Last week's results out of Tesla and out of Alphabet maybe gave the market a bit of a shock, and maybe looking to kind of find other places where maybe valuations aren't as stretched, and maybe not as much blue sky kind of potential is priced in. So I think we saw that, and I think it's a bit healthy as well. I think a little bit of a correction is maybe a little bit healthy for the offshore markets, and a little bit of rotation into some of the lesser loved and maybe slightly better from a valuation perspective stocks is actually probably better for the market overall. So hopefully the market kind of melts higher, but remains to be seen.
And just before we move away from this one, Martin, no one is doubting the investment case for AI. No one's doubting the fact that these are still great companies. We're just kind of in a different place, or moving possibly into a different place in the cycle.
Potentially. I think we've seen a lot of seesawing on this offshore market over the last 18 months, whether it be interest rate expectations or company expectations or AI or how expensive something is. So I think for now, yes, I agree with you. Maybe the market's looking for value in other places, and we'll maybe revisit these stocks on a more medium to long-term basis. But again, we're going kind of week to week, day to day at the moment. So let's see how we get on.
Look at some company news today. Glencore come out to announce a JV there. Looking to separate their coal assets. And we see their share price down 3.33%. This is something that Anglos has done before with Atungela. I'm wondering why markets would receive this so badly for Glencore.
We also had a Glencore update this morning as well, in line with in addition to what you spoke about now. And I think maybe that's what the market was paying attention to, because you saw a little bit of a production miss kind of across the board, maybe led a little bit by the therm coal assets. So that's maybe what the market is focusing on, although they have still kept their full year guidance from a production perspective in place. So maybe a little bit of a wobble just on the back of the kind of short-term update from that side. Again, I think anything that's where you split out assets and you do it from a shareholding perspective is trying to create value by getting these things priced kind of individually. And copper, as you know, is the star of the show at the moment when it comes to kind of longer term resource exposure.
Yeah, that's what we're seeing BHP do here as well. They've gone into a JV there, $2.1 billion invested in. They're keen to get your thoughts on this one. Like you're saying, copper is a good place to be, and BHP has been bullish on copper, but that share price is down 2.61%.
Yeah, no, it definitely. Yeah, I've seen that, and well, I mean, obviously they tried with the Anglos deal, which we all know how that turned out, and obviously their copper exposure, so they got to kind of look elsewhere for acquisitions and to get things going. So it's kind of in line with their latest strategic view of trying to find early stage copper production. So this is obviously focusing on the South American market, not super material from a kind of overall size perspective of the deal, but I think speaks to, again, them looking to find ways to access kind of strategic resources, copper being the one that's in place here. So let's see how it goes. Obviously, we need to get some more deals and metrics and things around the deal, other than $2.1 billion kind of deal size. But yeah, let's see how it goes, and let's see how they manage to kind of pull out those synergies between the two businesses.
Well, that said, we are seeing just a difficult day for resources counters as a whole, Martin, there, of course, with Glencore and BHP out, but Anglo's, Kumba all in the red today. Wondering what might be driving another day of red screens for our miners.
Yeah, it's been tough. It's been tough out there for the mining stocks. I think if you look at kind of the prices of the underlyings, it hasn't really helped. And then you've obviously got the production side of things, maybe fears around the demand as well, really starting to filter through in as well. So sentiment hasn't been great for them, but let's hope they turn. And obviously, not all resources are made the same, so you're obviously going to be, I think, a little bit more selective when you get into those.
Of course, one that's very interesting here is ShopRite. It just seems to be getting better and better for ShopRite. In fact, in the newsroom earlier, I wondered if Pick n Pay will ever catch up again. It just feels like ShopRite is so far gone, Martin.
Yeah, I mean, absolutely. I think they continue to steal market share in South Africa. And I mean, SA is about 81% of their kind of sales numbers. And again, another very, very decent, I think it was 12 to 13% growth in the kind of overall sales picture for them. So they keep putting the runs on the board. Look, it's in line with consensus, but I still think a very strong number relative to peers, relative to where we are kind of from an SA perspective, from a consumer perspective. The one thing I also liked in their update was their diesel numbers has, insofar as what they're using from a load sharing perspective on diesel, has halved from half one to half two. So from an SA perspective, that's quite nice to see that kind of filtering through as well. We need some tailwinds from a growth perspective. So positive. Look, I think maybe from a multiple perspective, maybe a little bit fully priced at the moment, but it's one that we really like on a kind of medium-term basis. And maybe we get some nice updates out of the business when they have their results on the 3rd of September.
Keen to get your stock pick, Martin, but first I'd like us to reflect on counters that have found favor with industry peers.
Keeping it local, so in the theme of SA Inc. shares, choosing Remgrow. We just feel that the discount to NAV of almost close to 45% is as wide as what it's been in the past. I think if you look at the underlying investments as well, you all have got exposure into an improving SA outlook. So if you look at the underlyings in financials, industrials, infrastructure, and even some of the consumer and healthcare shares, we all think that you're going to get some good tailwinds coming through for Remgrow going forward. There've been some good progress with regards to unlocking that discount. We saw the momentum placement a few weeks ago. We think that all these use of proceeds can actually go into supporting a buyback, which will then also be quite helpful in terms of total shareholder return to investors.
I'm going to go with African Rainbow Capital, which is kind of the new NAV kid. Interesting assets, also very much, SA Inc. oriented, but some interesting assets outside, particularly Time Global. Discount is even a little bit better, I think. We'll see in a few weeks' time. But yeah, I mean, to me, it is a really exciting portfolio. Discount of, call it about 50%, maybe it's slightly under that, for some really, really interesting assets and quite a lot of growth profile in that. So, I'm always intrigued a company with whatever it is, a 14 billion rand or 12 billion rand market cap.
So my stock pick is Robex, RBX, going back into that mining sector. The reason being is that they actually made a strategic investment in Baobab Resources, which is a chrome mining production company. And from their perspective, this is expected to boost their earnings. So that would normally lead to an increase in share price. We're also seeing positive trends in South Africa and Australia from a construction point of view.
All right, Martin, keen to get your thoughts on some of those, Remgrow, ARC, and Robex.
I think the thing that really stood out, and I think it kind of leads to my view, is that I think SA Inc., like I mentioned at the beginning of the show, I think is still quite a positive place to be, and I'm very constructive on it. I think we'll obviously take our cues from what happens offshore, and hopefully we don't have a big sell-off offshore, but I think SA is starting to look quite positive, and I think you're seeing some real green shoots, some nice tailwinds come through. So I'm still quite positive SA Inc. on a shorter to medium-term view. So broader theme, I'm just going to say positive SA Inc.
With that said, which counter are you loving this afternoon?
I think the mining stocks are actually looking quite attractive now. I think maybe something like Anglo's is due for a little bit of a bounce. So as you said, they've been a bit unloved, but I think maybe now is the time for a little bit of a bounce in Anglo's.
Brilliant, Martin. Thank you so much for joining us this afternoon. It's been a pleasure hearing from you. That was your midday markets update with Anchor Capital's Martin Smith.